The market has just reopened after yesterday's dramatic rise in inflation that has fueled talk of interest rate rises as early as next week. Business Editor Ross Greenwood joins us. And Ross, how is the market reacting?
Well, actually, it's in pretty good shape today, and this has come off the back of gains not only in China yesterday, but also then in the United States overnight. So as a result, we're seeing now that the ASX 200, the index of the top stocks in Australia, you can see here is up by 0.7%. I can tell you even since that's been done, it's gone a little higher again. So it's companies including AMP, which yesterday announced it was selling off its AMP Capital. It's up by more than 8% right now. BHP, the iron ore miners generally up around about 3%. So it's been pretty strong. But of course, this is against the backdrop of potential interest rate rises that are coming. And so when you look around the place and see what some of the comments from economists right now who have changed their forecasts as to when these interest rate rises will come, the NAB, the ANZ, both say that the interest rate rises are coming sooner rather than later. But if we go to some of those economists and just see what they've had to say in regards to this inflation number, you can see that there has been a fundamental change in the rhetoric of economists. David Basney's from Beta Shares, the higher than expected consumer price index confirms my view the Reserve Bank should and will raise interest rates next week. If we move on from there, you can see Sean Langcake there. The increasing breadth of inflationary pressures means the May board meeting is in play for a rate hike. And I think we've got one more as well. And that's Phil O'Donoghue, Deutsche Bank here, big bank internationally. Our baseline is for a 15 basis points hike at the May meeting, followed by 50 basis points in June, which would mean really you'd start to see about 0.7% would be the official cash rate in June, if that is right, as compared with 0.1% today. So really the tom-tom drums are beating, Laura. The Reserve Bank really now, if it does nothing, has to really genuinely justify its position, and indeed to justify its position as to why it has not acted earlier. Yeah,
it's hard to see how that justification would be made. But anyway, one part of the market showing signs of life in America last night, that's Facebook owner Meta. Its shares were down 44% this year. That's until it released quarterly earnings statement. Was it our time this morning?
Yeah, it was early this morning, our time. Meta, the Facebook owner, released its latest quarterly result. Now, previously, the last quarterly result, it was the first time that users had gone down. But after hours, which was when this was released, have a look at the share price. It's up almost 19%, $207.95. And the reason for that is Meta basically said that the number of active users have jumped to 1.96 billion. It was actually a decrease in that number in the previous quarter that caused the shares to tank, and it took a lot of other tech shares with it. Now, I know, Laura, that you'll be a very big user of Instagram. I know you'll be massive there, and Reels in particular is the reason why they're now suggesting that users are increasing, and indeed people are spending more time, in particular on Instagram, just sitting there flicking through funny videos that people have made. The big question now is how do they monetize that? That is the big key, but certainly those shares in after hours trading were very, very strong.
Yeah, with my few thousand viewers, I don't think I'm quite influencer status, but I'd like to change it. Oh, not quite.